Okay, hello everybody, and welcome to Investing with IBD, sponsored by MarketSmith. Today is March 25th, 2020. I'm your host, Arusha Paris, and with me again...
Dude, you cannot get rid of me.
I'm back.
I have not left this spot. I've been waiting.
Do I even need to introduce you anymore? I almost think that it should be Investing with IBD with Mike Webster always.
Mike and Arusha.
Yeah, well, maybe we should just call
that's
that.
a team, dude.
Okay, Mike Webster is here again, head of market strategy at Investors Business Daily. Thanks for being here once again, Mike.
Of course,
my new co-host.
Yes.
You know, Chris Gessel in the very beginning did the first 3 episodes. It was us 3, and I asked him when is he going to finally leave the show, and he left and he never came back.
He didn't come back.
So I don't want to say that to you because I always have a lot of fun having you on the show, and now it's also your show because you are, I think, the one with the most tenure now.
Yeah, I think so, and I can't wait to get back out into Woodstock.
I mean, yeah.
Can you see that?
Yes. Oh no, that's beautiful. And I mean, I've always said that I think I was born too late or born too early. Because I would have loved Woodstock, and I would have loved if I was a little bit younger right now using all the technology.
I know. So once this coronavirus is done, I cannot wait to get back out and see some concerts. We got to do it together, right?
That's true. No, we definitely will. So on today's podcast, we're going to talk, of course, about the crazy current market. In segment 2, we will go over some more historical precedents. We didn't get a chance to finish all of them last week, so that's why we're bringing Mike back on. He has so much so many great examples of fall-through days and how these some of these really volatile markets, how they looked back in the day, and some of the rules that we can take from those periods and use them today. So we'll spend more time on segment 2. We'll have it a little bit longer, and then we will end the episode with 3 current stocks. Okay, so let's get into the current market, and the market is still in correction, but here's the thing. We are now only one big day away from a fall through day on higher volume, right? We need a higher volume and back in an uptrend.
Yeah.
Mike, your thoughts?
Yeah, well, let's look at the Nasdaq on a daily chart to kind of walk through where we're at, because this is a lot of the segment 2. We're going to be looking at similar type of charts like this, and it's good to it's always good to listen to these podcasts. But I think the one that we did last week plus this one, because of all the historical charts, you should at least try to watch it once so you can see the chart. So what we've been in this really serious correction, bear market. Just since mid-February, and it's gone straight down. And we have some examples like that we're going to show in a little bit. But that's a lot of damage, and when something like that happens, plummeting down, it brings up all this fear, anxiety with traders, with just normal investors, people who don't trade. They start pulling money out of their 401ks. Then mutual funds have to sell, and it's kind of snowballs until eventually you hit bottom, and then you attempt a rally. And that's what we're in right now. We're in an attempted rally where we've hit bottom, and we have this, what we call a pink rally day, which 2 days ago, we had that day where you took out your prior week's lows. So that ended our other attempted rally that we had, because once you take out the lows, it resets your what you're looking for. Now, at that point, you're looking for a rally day. Because on that down day, it closed in the upper half of the range, and we didn't have a gap to deal with. That was your true range. It was in the 60s.
It was like 64% or something like that, right? So as long as it's more than 50%, right?
Exactly. It was 64, almost rounded up to 65.
Yeah, let me use the little thing here. So oh god.
Yeah, it's 65%.
It's 65. I'll take your word.
Yeah, 64.85. So we're rounded at 65%. So that's more than enough. But not only is it enough, meaning a 50% closing range is what we're talking about. If you've never heard that term before, it's just simply where the stock, or the index in this case, closes within the bar. So if you close at the top of the bar, the high for the day, it's a closing range of 100. If it's at the bottom, it's closing range of 0. and right in dead in the middle is 50. So with a pink rally day, meaning you're coming down in a rally, you've undercut lows, you're looking for a rally day. If you're able to bounce off that low and close in the upper half, then we consider that day one of our rally attempt. That's
Right.
all it is. You don't take
Right.
any action. You just start counting, and then you wait. So we had day one, then we had a
Right here.
really powerful day two yesterday, and that's what you like to see, that this rally continuing. So that was great action. And then today, we had great action until right near the close. And there's all this drama in DC. And whenever, this kind of doesn't it remind you of back in '08 when they were trying to pass some bills?
Yeah,
You know,
for sure. Yeah, it was anytime we had some really bad news, the market would just sell off really heavily, right? And I didn't pay attention to it that much back then. I was on the sidelines. I was actually in business school at that point. But every time I came out and saw the TV, I was like, "We're down 700 points." I think they had the Dow at that on CNBC, just a ticker, and it was just like unbelievable, the swings. So that's why it's so important when you're in these really volatile times to observe, but keep your hands tied, right? Don't do
exactly.
anything, because from every 30 minutes you're going through like a bull or bear market, it seems like, and so if you're acting on these things, you're going to be regretting it very, very soon.
Yeah, unless you're a day trader, and there's
That's true,
nothing
unless
wrong with
unless you're
that.
insane.
If you're a day trader and you know what you're doing and you have good risk management, this is a great environment because, like you said, you have a bull market almost every day and a bear market almost every day.
Right.
But for those of us who don't do that, that's not what I do. That's not what you do. You're sitting on your hands and you're waiting because you can get events like this that happened today. And this really reminded me of '08. And at that time, we were on the sidelines, but I was sitting watching, C-SPAN and watching. They even had it on CNBC for a while, where they had the floor, and you're watching the votes, and you're sitting here, finding out if they had enough votes to pass these critical bills. And that's where we're at right now. So you've got everyone's fighting, and everyone, I don't want to get into politics, but you got that situation going on until it gets resolved, where it's actually signed. It's not a done deal, and that's what happened today at the very tail end. There was some news out that certain senators were kind of pushing back, and so the market just fell because it doesn't like uncertainty, and we need this bill to pass to move on to the next phase of hoping that people start getting better.
Yeah,
But
and I think another big reason why they said let's hold off one more day is because if they pass it tomorrow, it'll be day number 4, and we could go into an uptrend then. I mean,
they were looking out for
they're looking
us.
at the rules too. Yeah.
They were looking out for us. They knew the IBD rules were day 4, which brings us back to we had our pink day rally day.
Right.
You're such a conspiracy theorist. Um, so I get to have some conspiracies later. We'll circle back to that. So we had our pink day rally day. That's day 1. We had a powerful day the next day, really powerful day 2, great action. Today, it was breaking out of that little range, and you see that. Can you draw on there that range that we've
Well, let
traded
me
over?
try. We're using Zoom right here,
Oh, then don't
and
worry about it.
so
But you can just see on the chart over the last week,
so what do you want me to draw?
no, down below the trading range that we've been in for the last week and a half that we moved up through today.
Oh, okay.
So, anyways, we're going back and forth with this really violent
A little bit.
action. Exactly. So then once we went through it, it was key that we were able to stay above it. Well, we
Right.
were above it until the end of the day. So this action is not good the way we came in. So it sets itself up to come in lower tomorrow and possibly even test the 7,000 range. But it's completely news dependent. On just how DC if they get their act together or not. But
Yeah, Mike. One thing that does
yeah,
concern me is that gap right there. You know,
yep,
it potentially could come back and get filled,
sure.
especially if it goes back in that trading range. So that's another thing to be aware of. Maybe the bill disappoints the expectations and all that kind of stuff, but we'll worry about that later.
Yeah, exactly. Which is why we have the system that Bill created, and I just want to give a big happy birthday to Bill O'Neill. It's his birthday
Absolutely.
today, and the
Happy
most
birthday,
special
Bill.
person around. So happy birthday! And even though this is going to be released tomorrow, the day after his birthday, but the getting back to this, yeah, we could certainly fill that gap, which would be normal. But we're sitting on our hands waiting for the follow through day to happen, the
Right.
concept that he came up with decades ago, which is another big up day on an increase in volume from the prior day. So that's what we're looking for at this point, is to hold above the pink day rally. Could you just point to that, the
Yep.
low of that?
So here's your pink day rally. So
Yeah, so we want to hold above that, and we can just wait, and it can happen on the 10th day. We've even studied, Charles Harris, Justin Nielsen, and I, did a ton of work studying follow throughs historically, and there's some that have happened in the 28th day. It doesn't happen very often, but typically it's between the 4 and 10 or 4 and 12th day.
mhm.
So tomorrow is day 4, so we'll see how that plays out. Want to
So
look at a
let's
monthly
go
chart real
the
quick?
monthly chart now. Okay, so here's the Nasdaq on a monthly chart.
Yeah, so the important point here is I've talked a lot about this long-term precedent, the 1949 to 1966 precedent, and at this point we've penetrated a very important trend line. Now, if we're able to move up, we'll be back above that, and that's a signal to, as long as we have a follow through, to be
Right.
aggressive as you move higher. But as we stay below that key level, which we are right now, then you want to be more conservative because the assumption is we're not in that major bull market unless we can get above that trend line.
You want to switch over to the Dow now?
Yeah, so yeah, let's look at the Dow on a daily chart because this is interesting. I always talk about how I don't look at the Dow because it's really not a relevant index other than everyone looks at it. All the media looks at it.
Yeah.
Anyone who doesn't trade looks at, oh, the Dow is up 1,000 points, it's down 1,000 points, but it's price weighted versus all the other indexes that are market cap weighted, meaning the more valuable your company is, the more weighting it gets. Whereas with the Dow, because it's old school, they couldn't do it back then. They didn't have computers, so they just did it based on your price of your stock, which we know by itself is not a relevant factor. So that's why I don't follow it. Plus, it's only 30 stocks and they're handpicked. So, but yesterday there was a lot of press about it being the biggest day since 1933. Can you do a track price on that to show how much it was
Yep.
up? So what
It's up
what is that?
11.37%.
Yeah, so if you have the news on it all yesterday, you heard there was the biggest day since 1933. And I thought, wow, that's great. You never hear in the news anything about the 30s. And last week, when we did the podcast, we were looking at the 30s. So why don't we take a look at that table real quick that Justin Nielsen put together for us, and it's the biggest up days that the Dow has had on a percentage basis going all the way back to 1900. Um, you Let's see if we have that. Okay. So at the very top is that date that they're talking about, March of 1933 on down. And as you go through here, you'll see most of these days happen during bear markets and
Right.
severe bear markets. So we have a lot in the 30s. We have, that one in the 87, a couple in 2008. But then you have the one on March 24th, yesterday at 11.37. So I thought it was very interesting, and we should just circle back to that chart real quick in the of the Dow. Perfect. So up at the top of the chart where it's 386 points, this is a weekly chart, and that's prior to the 1929 crash. And this is something that we looked at last week. And you can see in here a lot of those spike ups, those moves up were during this prolonged bear market. So don't get excited when you have big up days. And that's kind of the point of this little part of the segment is one big up day doesn't mean anything. And so we came down, we hit the 40.56, which was just like what happened in 2002. You had this quick 100% rally up to 81.39, and then you went through these multiple waves down, which is just like what happened in 2003. We're going to circle back to those in segment 2. So let's take a look at the daily chart here. And this was your actual follow through that happened. And this is before that big day that everyone's talking about. So this is your 4th day up. You have a pickup in volume, and you're up in the top right-hand corner. You can see that you're up 2.47%. So it's way more than enough percentage. Typically, historically, it's just been 1% that you've needed. And it looked right. By looking right, meaning the close in the upper half of the range, and the volume looked right. It doesn't have to be above average. This one was, but you want it to be higher than the prior day. And do you have any thoughts on this particular chart?
No, I mean, it looks like a follow through day. It fit the definition of the follow through day, right? And so then you just got to treat it like that.
Yeah, so let's go to the next one, because this is a day that everyone keeps talking about, that big up day in 1933, which I think is just a little disingenuous, because what happened there, you can see we were just flat for a week. That's because there was a bank holiday where they were looking into the solvency of banks. So the market wasn't open. So when you have a market that's closed for a week and then it reopens, you have all those pent up days of demand or selling pressure. So seeing that big move up, that 15%, is really, it's more what that move would have been stretched out over a week. So sometimes when you hear part of the news, it's not the entire news, and an enormous volume. So this would be what we would call an additional follow through day. So you already had your 4th day follow through.
Right.
Now you had another day. In this, you take more action on this day. Let's go out to the next slide.
And then you can see ended up, pulled back a little bit, but then it ended up, and a lot of times these fall through days, that's what happens, right? They take a little bit of time off, but underneath, a lot of leading stocks are now starting to break out of bases, starting to move up. And that first month sometimes is scary after the fall through day. It leads to a great rally, but you get your positions in place, and then all of a sudden a month later, when things really take off, you're really happy that you have positions in some of the best stocks that have just broken out.
Exactly. And I think that's the point that both of us are trying to make over the last week's podcast as well as this one, is that the follow through is a very important concept, but by itself, it doesn't mean you. Could we go back to that slide real quick? Yeah, just there's one other point that I wanted to make on there, that and as you were saying, that it pulls in for a bit, and that's normal action. And so that's why you don't just plow in and go super heavy. You wait until you start trending above your 21-day moving average. And that is that kind of fuchsia purple line there, where your low is being maintained above that. And as it starts happening, that's when you start putting on the gas. That's all I had to say on that one, Arusha.
Oh, perfect. So the market's in a correction, and remember, we're still in a bull market, but now it could be day number 4 and on. So we could go back in an uptrend at any time. But remember, that doesn't necessarily mean it's going to work. That's just the first thing that we're looking for. So let's take a quick break. But when we return, we're going to go over more historical precedents. Stay tuned. I am here with Scott St. Clair. Scott's one of our senior product coaches at MarketSmith. Now, Scott, there are a ton of publicly traded stocks just on the U.S. I think it's over 5,000 stocks. Who has the time to go through all of these stocks and find the very best ones?
Yeah, most people don't, right? So what you need is a tool like MarketSmith. We have decades of research on what makes a great winning stock. So we've done all the research for you. So we're going to try to highlight those specific stocks with those great data points. So if you're looking for that next great potential big winner, orange stock ideas button, you just click on it and you've got some of the main reports that we use, including the Growth 250.
Yeah, and the Growth 250 is the first list that I go through on the weekends.
Yeah, it's the most popular one, but there are others. There's the Breaking Out Today, Stocks Near a Pivot, and then the Blue Dot list, right, which is very popular. It's going to show you the stocks with the best relative strength. So we've done a lot of the work for you. What you have to do is review these lists. You're going to come up with some of the best ideas in that current market environment.
Perfect. MarketSmith saves you time and makes investment research that much easier. For more information, go to investors.com/podcast2020.
Mike Webster is our guest on Investing with IBD, sponsored by MarketSmith. Okay, Mike, let's talk about a little historical precedents and maybe put on your stock market history hat. Reach back into the Grateful Dead realm that you have there. Put on your stock. You kind of lost it. The dead.
It doesn't like it.
No,
it thinks it's a green screen.
We're losing your head now.
That's not going to happen. Okay, this is reality.
All right. Okay. So Mike has put it back on, and okay. So let's go to 1980. I'm gonna pull up the screens here, the PowerPoint. I'll blow it up.
Yeah. And so while you're pulling that up, I just want to kind of lay out what we're going to do with this segment is. Chronologically, last week we started with the 30s and kind of went forward and looked in, I think up to 73, 74.
Right.
And we ran out of time because this is kind of, packed full of information. And so what we decided to do this week is to kind of start where we left off, and we're going to go through, most of the major bear markets that happened post 73. And we're going to use the Nasdaq for all of these. So that way you guys can have a reference piece. Some of them are going to lay out or lay nicely with our current bear market, and other ones, something you're going to use for future ones.
So this is April 2nd, 1980.
Yeah. So this is kind of a unique one in that you had that other correction in October that you came out of, and when we were going through the very beginning of this mess, I was thinking that it kind of resembled that in a way, but then things got much worse, like what happened here in really February to March, April of 1980, and you can see it was just falling straight off a cliff there. And on that bottom day, it's a little bit unusual to have a down day that is that bad, and then have an inside day the following day. So that
So you're
I've moved on to the current one. Yeah, over here. So there's your down day, and that the low of that day becomes the low of your rally. And what's unique is that our first day, or our day one of the rally, is this widespread, but it's still an inside bar of, meaning the high and the low are contained within the high and the low of the prior day, that really bad day that even had a gap down. So it's even worse than it looks. So typically you don't have that. You have it more where you undercut the prior low and you turn in reverse. So this is unique. And one to just kind of, put away for the next time something like that happens. And you don't buy it on that day. You don't buy it the next day. You wait for a follow-through day, which is the April 2nd here. And you're up 2%, which you see up in the top right-hand corner. And the volume isn't higher than average, but it's higher than the prior day. And that's all that matters. That's a Bill rule that he came up with, is you just want to see a pickup in volume. A nice pickup in volume is better, but you don't have to have it.
And Mike, one other thing that's interesting here, and something to keep an eye on, especially even in the market that we're right now, is looking for an undercut of key support areas. And so you have that 132.49 right here, and so that gap down. Yeah, and you might have mentioned this, but that gap down, it undercut there and came right back up. You're shaking out a lot more people, and actually even it's 128.74 too.
Yeah,
you're knocking out a lot of shareholders at this time, and scaring everyone who wants to be scared out. And a lot of times, once you shake out everybody and all the sellers are gone, that's what gives it the power for the market to start moving up again.
Such a great point. So why don't we move forward?
Okay, so now this is May 13th of 1980.
Okay, And let's just see, on this one, what's interesting is that you'd moved up and then you kind of went sideways for a couple of weeks before you had your next thrust back up above your 21 day. So it kind of reminds me of our current market where that we're so far below our 21 day that it's going to take some time to get back above it. And that's really once the area where that you're really confident to start, kind of putting on the gas.
Yeah.
And let's move forward.
Okay. And here, this is July 14th in 1980.
Yeah, so this is just showing you a very powerful, this is about, when people talk about a V recovery, this is about as V-shaped as, as they come. And
Yeah.
they're on the rare side because typically you need more time going sideways and another shakeout to happen. But you don't want to think, oh, this can't happen, because it has happened in the past. And this is a great example of it. And as long as you were above your 21 day, you were fine.
And one key thing here, and we spoke about this last time too, when it was falling apart, huge volume bars, and then as it started, especially once it got back above the 21 day moving average, all of a sudden those bars got a little bit tighter, and now it's just crawling up. So the bulls go up the stairs, the bears go out the window, which is not necessarily the nicest analogy, but it is kind of a classic saying in Wall Street.
And so this is now a weekly chart. And so that's what we're going to be showing you with most of these examples, is kind of what it looked like at the very beginning of it, as it started trending, right, and then stepping back and seeing kind of the bigger picture of why you don't sit and wait for that pullback, because that's what you're going to hear. If the market starts ripping up, you'll hear those people say, oh, wait for a pullback. And many times, as we'll see with the other examples, they are right, but there are these ones that just keep on going without you. And so you do need to participate. You just don't have to go crazy unless you're making a lot of progress.
Yeah, and the amazing thing is that if you just buy a little bit on that fall through day out of a stock that's breaking out, and that starts to work, it's pretty incredible how quickly your confidence can change, right? And so that's all that psychology is, just trying to get yourself to start buying again. And once you start seeing some evidence, getting some feedback in the market that, hey, this one stock isn't necessarily blowing up anymore, I'm starting to make a little bit of progress, that's going to give you the confidence that, okay, now let me try another stock that's breaking out, maybe a few days later, then another one another week later, right? And so then it's just going to slowly pull you in, and within a few weeks in a really good rally, you'll be 80 to 100% in, and then the market really starts taking off. So that's pretty the amazing thing about these rallies, how they really work in the beginning. It's not obvious, but they're not shaking you out suddenly.
Exactly. And if you listen really closely, you can hear Georgia whining in the background, my Saint Bernard, who wants to come in and play. But
you're bringing Georgia for sure.
Well, she is part of the COVID coronavirus thing where we're stuck at home. We tried grooming her ourselves. It's not pretty, dude. The poor thing. She doesn't know that it doesn't look so good. But we're gonna have a friend of ours come over and fix what we did. Okay.
So this is 1982, August 20th, 1982.
So yeah, with 1982, you always, when you hear about the bull market, you think of the bull market from 1982 to 2000, right, very similar to what we've talked about before. From 1966 to 1982, for the most part, was a sideways type of action. So this is a very important one to look at, and you can see that we had this very kind of classic where at the end of this bear market, you didn't have this big capitulation or a big down day like we just saw with the last example. It just kind of stopped going down, and you had a tiny little up day, which is that. Can you mark that our day one?
Well, first, before that, it looks like we had three waves down here, right?
Yes.
So that is one concept that you'll hear us talking about a number of times,
where
it isn't a necessary capitulation, but it's more of a wearing out everybody.
Yeah, and we're going to see that, a really good example of that, when we go over the 2003 bear market in just a little bit.
Okay, so here's the first day, or
Yes.
second day actually.
Yeah. So you see that the first day, we call that day one because the pink day did not close in the upper half. So that was our day one there. And
Yep.
most people will say, oh, don't you need this huge big up day as your day one? And no, you just need an up day, any up amount, because it's just starting the count of a new direction, but you're not taking action until you get that follow through motion that you had on the day of this chart, where you're up 1.25%, which was more than sufficient for back then, and you have an increase in volume at that time. And you know, a couple days before that, you had a big day, but it was only day 3, so you weren't ready yet. You needed to give it a little bit more time. So this is your classic day 4, and you buy something here. But let's go
Well, this is
forward.
actually a day 5, right?
Day 5. I'm sorry. I'm day 5.
Okay,
Let's.
so yep, and okay, so now you have your follow through day, and so then let's wow, look
Yeah.
at that.
So again, kind of like what's interesting about these examples are, you know, ones that we saw last week and some of the other ones that we're going to see in a little bit have that other movement where it comes back down. So I wanted everyone to see these because they don't all do that. And look, imagine if you were sitting on the sidelines saying, I'm going to wait for that pullback. I'm going to wait for that pullback. I don't believe
Right,
it.
right.
Then the pressure builds, and then, you know, you start doing silly stuff and you try playing catch up. So that's why you want to take some action. And just like what you were saying, on the last one, you build that confidence by getting a little bit of a cushion underneath you. But focus your eye on that 21 day. Your low is above it. And that's really all you need to know. And you have that huge move up.
Yeah, and that's the beauty of the follow through day system. It's simple enough to adapt in any environment. We saw it last year when everyone thought that it couldn't be a V-shaped rally, and we had a fall through day. I didn't even believe it, but it's like, okay, gotta follow the rules and buy something, right?
Mhm.
And then it just really just built on its momentum and just carried through and really fooled everyone. The only difference is uh, you could have been fooled at, but if you were following the rules and listening to the market, you would have had positions while getting fooled. And it's like, wow, I'm glad I listened to the fall through day. So that's the beauty. The system is simple, and that it can adapt. It adapts to any type of environment.
And one thing that you can do is, let's say on that follow through day, there's not any merchandise out, and not any perfect stocks, you know, setting up right. You can just buy, you know, the spiders or the Qs. Now it's controversial because some people really are against that and think that you should only buy individual stocks. And there's nothing wrong with that. There's all sorts of ways of trading. The way I look at it is, if you have a valid follow through, then go ahead, and that you can't find anything perfect, buy an appropriate amount of the Qs or the spiders, you know, an ETF that represents the market. And then as you start seeing things breaking out, you can sell some of that. I call it a source of funds. Use those Qs, sell some of that to buy the stock that's breaking out of the perfect base. So that way you don't get left behind.
Perfect. Let's go on to the next example. Well, here's a weekly chart on 1983, and
And
this was the rally that led to that Bill was heavily invested in and led to getting the funding to start IBD.
Yep, exactly. And here's where you can see those 3 waves down that you were talking
That's
about.
right.
It's a lot easier on the weekly chart. And again, this is the poster child for you know, not waiting for that pullback that never happens. Imagine you finally get the pullback up here at the very, very tippy top, and now it's ready to pause for a while.
Right. Yeah. It's just amazing. Just listen to the market, and if you just know these simple techniques and simple signals, just listen to them. Try it. Sometimes they don't work. It's not like these follow through days always work. They definitely don't, especially in more volatile, really serious bear markets. But no bull market has ever started without one, and that's what you always have to keep in mind.
Exactly. Now we have a fun one coming up next.
And this is 87. Oh,
Yeah.
oh, okay.
Yep,
87.
19, 1987. So this is the one that's on, you know, everyone's mind right now, because we just crashed. We just crashed, and this is the kind of the scary one, because you're so far away from your 21 day, like we are now, and then you get a follow through, but in this kind of weird position. It's right before you hit that 328.82. There's actually the day before that. Do you see that as you're bouncing off the bottom?
Yeah, I'm just
Yeah.
so right here,
Yeah,
right?
yeah, you
So
actually
that's yeah.
you get your follow through there, but it's not convincing, with that
Yeah.
big, huge move down that you had. It's this tiny little day. It does qualify. It was up 1.89%, so it was more than enough to have
And
as
so
a
you're still
follow through.
looking for something to buy. You
Yeah,
put a little bit of fee because you have to respect that. You put a little bit in, and if it doesn't work, you quickly back away. Maybe you take a percent hit to your portfolio or something. You're going to get nicked, but you have to respect that, and you look for and you put a little bit of money to work and see what happens.
yeah, and then as you close below that follow through day, that's kind of where you're starting to back away, and that's your first line in the sand. You don't have to let it go all the way back to the lows, which was the 288.49 at the absolute lows. That's telling you that what, this follow through isn't ready yet, and you want to give it some more time, and kind of wait for either another real follow through or to get back above your 21 day, and which is that fuchsia line there. I think I'm going to have to let Georgia in a minute because
Yeah, let
um,
George in.
but let's get through this example first. And so let's move forward one chart. Okay, and you can see, no, the back one.
Oh,
Yeah,
did I
back
mess it
one.
up?
Yeah. Okay.
Here we go.
So here you can see, once we start getting above your 21 day, which it just needed
Yes.
time to for that to happen, that's when you're really going to be making progress. So this is really kind of that pullback that everyone is saying that will happen. Let's say we get a follow through tomorrow, maybe something like this ends up happening, and so just wait to start trending above that 21 day to feel confident.
Okay, so now we're moving on to 1990. This is October 18th, 1990. Iraq War won, Bush
Yep.
won.
Yeah, so this is a big deal, right? And this
Yeah.
is, very substantial move down, just like what we're, going through right now.
Yeah,
And look at this tiny little follow through, but it's up enough.
it
It's
is a tiny little fall through.
2.2%, but in relationship to the entire move, it just doesn't look like a lot. So all follow throughs are not created equal. You don't have to plunge on each one. You just have to buy some amount and relative to, how it is looking. But this is kind of that, it had that classic bottom day where you had a nice upside reversal and it just held in tight there. And then you got this thrust, which was the follow through day, where you have a pickup in volume, you close near your highs, and you have to be taking some action.
And,
Let's move forward a slide.
and just very quickly,
Mhm.
the what happened the drawing thing? Here we go. Here's your upside reversal that you were just talking about, right?
Yes,
So here we go.
exactly. So an upside reversal, if you're new to charts, is just when you undercut some sort of area. It looks like you're going down all day, and then at some point it turns and then goes back up. So you've cleared out, you've shaken out below any recent lows, certainly the most recent week's lows, and then you close in the upper half. The assumption at that point is that you're going to move higher. The same thing works in reverse. If you can go up to the top there at the 470 and 30 cents, that you had a downside reversal there, where it looked like it poked up into new high ground
Oops.
for a second and then came down, closed at the lows. And when that happened, your assumption is going to go lower. Not all the way down here. It's just a short-term directional change thing that you're always paying attention to. And then again, so this is that same time frame, but we went out a bit. And this is why, if you want to wait a little bit, just wait until your low starts trending above your 21 day, which is your safer bet, because this one did have that nice little pullback in there, and
Right.
then it moved above it. This is telling you that, okay, it's time to start really making some, putting some chips in.
Yeah, and so it's not like they're always rocket ships when we get the fall through day. It takes time for these moves to happen, and everyone, and it's funny, and this is psychology once again. Everyone will buy at different times as the confidence comes in, but everyone panics at the same time, which is why you get these vicious kind of selling days. So you want to just keep that in mind as this goes along. It might not be a rocket ship right when you get a fall through day.
And that's your weekly, so you can see that there's a roller coaster of a time frame where you're having these multiple bear markets, but you've got to pay attention to the follow through, because that's how you're going to participate in this upside.
Okay, so this is 1998, September 8th of 1998.
Well, if you've never seen this before, you guys are in for a wild ride. This one is crazy. This is so fascinating. And I remember trading back then, and we don't have enough time to get into that, but this is really interesting time, and long-term capital was blowing up. And anyways, you've come down kind of a mini crash. Then you have this nice upside reversal like we were talking about, very classic looking bottom. And then you go out, what is that, 1, 2, 3, what is that, the fourth or fifth day?
It looks like the fifth day.
Yeah, the fifth day, you've got this really powerful follow through day, increase in volume, you're up 6%, closing at the highs. It doesn't get prettier than that. So you start buying at that point, and let's move forward. And look what ended up happening.
That's brutal.
Yeah,
So
ran
here's
right.
your fall through day right there.
Exactly. That's where we were just at. And then it ran up into the 200-day, which is your black line, and then the 50-day, which is a declining line right there. And it just couldn't break that resistance. And that's why you got to take it one day at a time and really pay attention as the stock, as it started breaking back down below that 21-day, if you could mark that. So it ran into the ceiling of the 50-day and the 200-day, and you can see how it broke that 21-day. You had some bad days closing at the lows. You need to back away. You don't know how much worse it's going to get. That follow through is running into trouble. And look, it comes all the way down and creates the most classic pink day rally day ever, where you have this huge spread, close, shook out, and then closed mid-range or the slightly higher. And then you have this, what is it, 1, 2, 3, 4. I'm having trouble counting. Fourth day follow through.
Actually, well, if you're counting the pink rally days, 1, 2, 3, 4, fifth day follow.
Yeah, fifth day follow through, up 2%. Increase in volume. Again, pay attention to the volume on here that's less than average. So you're going to always hear people say, "Oh, you need this huge volume on a follow through." Well, those are people that haven't really sat and studied reality, because the reality is that doesn't happen in a lot of these cases. So that was your follow through. Let's move forward. And now, do you see where you start? Yeah, you had that rocket ship. This is where Bill was buying AOL and Schwab and made a fortune off of those. And he was pressing hard early on. But look at how you're trending above your 21-day. And that's such nice action. And now you're into new high ground.
And I got one second. Let me properly. The follow through day was here.
Yep, that was the follow through day. And then if you could
and really then the next day was that a fall through day too, or the volume was lower a little bit?
Let's see. It looks like it was from. I'm having trouble lining it up.
I'm having trouble lining up.
Yeah,
too.
it looks like it was an additional follow through day there, which is something we pay attention to for the first 25 days from the low. It's part of market school that Charles Harris, Justin, and Nielsen and myself put together about 9 years ago now, where we came up with a bunch of rules, and we found that a lot of these follow-throughs that end up working have additional follow-throughs, days that qualify as a follow-through, but they happen after your first one, and it's just a sign to get in, to put more chips in. Not to plunge, but it becomes a gradual thing, just like moving above your 21-day, having your low above your 21-day, and closing up for the day. That's another sign to, start getting in deeper. And you can see that. Can you point to the first day where you're above your 21-day, where your low is? That's the beginning of this nice trend up.
That's
so
right.
Even if you just wait until that point to start getting heavy, it never looked back from there.
And once again, another thing, learn to love the shakeouts, right? Here's that other key shakeout. When you see that, what's everyone's instinct? You're breaking a key support area. Oh my God, this market is going lower and lower. And Mike talks about this all the time.
Mm-hmm.
Expectation breaker, right? If
Yep.
it breaks that, now you're expecting it to take another big leg down. And if it doesn't, and all of a sudden it comes back in a few days, that's your expectation breaker. Maybe this market now is finally shaking out everybody. It might have the power to move up higher.
Yeah, that's why that pink rally day that we had 3 days ago was so nice, because it was not as classic as this one, but had that classic feel of it shook out and it closed up, and yeah, you could feel the panic that switches from kind of a panic selling to a FOMO, of a fear of missing out, where people are buying stuff. But I think we have a monthly chart to kind of put things in perspective on here.
We go. My God.
Yeah, look at that, Matt. So what you should do is, when you have time, and so this is after the top in 2000, is to go back and study this on Markets Smith, and use the change date feature and go through, day by day. It's time consuming, but just pick one of these bear markets a week and study it, and play back what the two of us have talked about, and learn from that. And that's, I cannot tell you how many, hours and hours I've spent just studying these, and you still pick up new stuff. Like every time I'm like, oh, I didn't notice that before. So you can never look at it too much.
Yeah, I mean, it's the same thing as even reading the How to Make Money in Stocks book, or listening to some of Bill's old tapes, or even listening to some of these podcasts that Mike are on, or some of the other great Cancel investors that we've had on, and they're talking about their experience. There's a point where you might not be ready to hear that information. I remember after a few years, I picked up the How to Make Money in Stocks book and started reading about the relative strength again. I was like, oh my God, I didn't realize he was talking so much about the RS line, because my experience wasn't up to that point to really notice those words and the wisdom that Bill was talking about there. So the more you watch,
along those lines, I didn't mean to cut you off. I'm sorry. The Reminiscence of a Stock Operator.
Yes, exactly.
One of Bill's favorite books, and certainly mine and your favorite book too, right? Besides Bill's, that the first time you read it, it's just a story, and then after you've traded for a while, you're like, oh my God, there's really nothing else. That Bill's book is very nitty gritty, and it's like, it's like a step by step, like a recipe of how to trade. Versus Livermore's book, The Reminiscence of a Stock Operator, is a story. And as you're reading this story, you're understanding all these key things. And if you don't do anything else but read Reminiscence of a Stock Operator, you're going to be a great trader. It's just nothing better than that.
It's shocking at how brilliant that book is.
Yep.
I mean, it is amazing how many lessons there are in that book. And you really want to try to read that one every year, because you're going to learn something else in these stories. So now 2003.
Yeah, so this is what you were pointing out, the 3 waves down earlier. Right. So we're going to kind of go through that. And so we started off the show with, in segment 1, of talking about 1933. And this is very similar. If you recall, in 1933, at the bottom of 32, you had this quick rally up where you doubled. And it's very similar to this time frame of October of 2002, where you had this quick rally up. And it doesn't look like as much as it was, because the chart is compressed, but that was a huge move. You went from 1108 to 1521 in a blink of an eye. And then you started going through, distribution. You're underneath your 50-day. You need a follow-through day. So this is probably the most important one of what we're doing to get down, is that not every follow-through works. And so we're going to go through this one kind of quickly, but go back and spend time paying attention to it. So here's our first follow-through that we have. We're up 2.67%.
So you try it. You take a shot, buy something, you try it.
Yeah.
And then
it failed.
It fails, right?
Yeah,
exactly.
So you get back out. You broke through your 50-day pretty much right away. You're back through your 21-day. So you back away and you're waiting for another follow-through. And then we have it here. We're up 1.5%. We've got to pick up in volume. So we've got a follow through in here. So we're going to give that another shot. And guess what? It's not going to work out. And finally, this is the one that worked out, and you undercut your lows. So this is your 3 waves down that you were talking about earlier, which is the classic example of 3 waves down, where it doesn't shake you out the first time, it shakes you, or the second time. Finally, that third one is going to get every last person there. People, think that they've got everything figured out. That's when the game changes, and now you have this beautiful follow through. Closing at the top of the range, you're finally able to make it above your 200-day. Nice volume, up 3.88%, but you still don't go plunging. This looks just like 1932, 33, and I remember distinctly, as this was happening in the prior weeks to this, discovering and studying the 1932, 33, in the parallels between this this time frame, and I shared it with all the PMs. I walked through. I'd marked everything up, and one of the PMs, of course, was Bill that I showed it to, and he right away he got it. In fact, we were faxing them back and forth, and then and he really got into it and understood what was going on. Now, you got to remember, during that time frame, we'd been kicked around from March of 2000 to this time frame. So, someone here in the new kid has this, theory that we're just like 1932.
Right.
It didn't really go over well, except with Bill, and he completely bought into it, and we got very aggressive because we understood that, and I said at that point, I said, if I'm not right on this precedent, I think I need to find a new career, because I was that convinced of it. Never ever say that.
Now, I mean, another key thing here was, so you had this powerful fall today, but you had a number of the best stocks in the top industry group breaking out on that day. You had Yahoo breaking out, Amazon broke out, and a new IPO named Netflix was starting to run at that point too. So you had reason to get exposure in the market. The leaders were starting to emerge, go up. Even NetEase, I think maybe a month later in April, started to really move at that point.
Yeah, and Bill was already pretty heavy into eBay at that point, because he had started buying it in October.
Right.
So now this the chart looks kind of a little funny, but this is just out a few months from there. And there's your follow through day. And notice how it had a couple of weeks where it needed to kind of pause and digest things. Then you started trending above your 21-day. Very powerful move. Let's go out to the next chart to see the context of it. So there you can see kind of, us coming down from 2000, hitting bottom 2002, then that follow through that we were just talking about. A really, really big move in the market.
And also really another 3 waves down.
Exactly.
So that psychology is always working against us, so you just have to be aware of it. Okay, Mike, let's just very quickly, this is a very, very long segment, the longest segment ever in the history of podcasts, I think. But let's just very quickly just touch base on 2009. Most people can relate to this. You had a fall through day here, two fall through days before that failed, kind of like 2003. Your quick points here.
Yeah, and so on this one, you want to look at other indices besides just the Nasdaq, and so typically the S&P 500 is the other one that you want to look at for all of these examples, because there are times, like, and I think this was one of them, where you get that signal on a different index before the Nasdaq. So really just those two, the S&P and the Nasdaq. Historically the Dow. But this was classic because the fear was so rampant, and everyone thought the world was coming to an end, and it could have, but it just stopped going down at the very bottom. You didn't have a capitulation. Everyone was waiting for a capitulation. You just started going up. You had another follow through. There were tons of failed follow throughs over the prior year, but you have to be willing to step back up and buy it yet again, and let's see what happens going forward. So now you start trending above your 21-day. So as that's happening, you're getting more and more aggressive, because there wasn't a ton of merchandise to buy, but that was the beginning of this this recovery off of the the financial crisis. And let's move out to the next chart real quick. and this is it on a weekly, so you can really see that entire massive move that it had off of that bottom there, and why you have to pay attention to every single follow through. Know that lots of them you're going to get nicked up, but if you want to participate in a big move like this, you have to use something that works, and a follow through works.
Perfect. So there are a number of fall through examples to take a look at, especially you've gone through the last 2 episodes with Mike. You have the most significant fall through days that are applicable to the market that we're in right now. So coming up next, we are going to talk about 3 current stocks. We'll be back.
I'm here with Scott St. Clair, and Scott is one of the senior product coaches at MarketSmith. Now, Scott, we've both been doing this for a long time, and we know that investment research takes a lot of time. There's so many factors that you want to look into to try to figure out whether this is a stock to buy or not. Quarterly earnings, huge sales growth. Hey, are institutions buying it? The list goes on and on.
Yeah, it's a common question. I hear it all the time. I don't have time to do this work. So you don't have to spend that much time. If you have a tool like MarketSmith, we do a lot of that work for you. Right there on the chart, earnings, sales, group strength, institutional sponsorship, like you just mentioned.
Right.
It's all there in the chart, so it allows you to make a decision much easier.
Yeah, and the beauty is that we have in-house analysts that go through the SEC filings. They pull out those numbers, and they put it right on the MarketSmith chart, and all you have to do is analyze them.
Yeah, I couldn't imagine having to go to the SEC website and look at the income statement, et cetera. That sounds like a lot of work.
Yeah, and that would take hours and hours, and in that time, you can go through hundreds of stocks and find the best ones. So don't miss out on a big winner because you don't have enough time to research it. For more information, go to investors.com/podcast2020.
We are back with Mike Webster on Investing with IBD, sponsored by MarketSmith.
Okay, and the
Mike.
Grateful Dead.
And the Grateful
Well,
Dead.
not really, but you know.
Yeah. So Mike, let's talk about some stocks here. This has been a pretty long podcast, but very, very informative. And you also have a special guest that may join us. So our special guests. Right?
Georgia and Violet are now joining
back.
us because they were going crazy. Georgia is the Saint Bernard and Violet is the Golden Retriever. And please forgive the fact that we tried to groom them ourselves. Never.
and their favorite stocks are Chewy, CHWY.
That's what they told me.
So let's go back to MarketSmith here, and the first stock that we're going to talk about is Atlassian Corporation, ticker symbol TEAM. And Mike, when I look at this chart, if I'm just looking at the price and volume action, this chart is really sloppy and wide and loose. I don't know why you're even bringing this up.
No, it's horrible. And so I think that's such a great point that you're making. If we were to have looked at the same chart 3 months ago, I would look at it and say, this is, complete garbage. It's all over the place. You don't want to touch it. But you always have to look at the market within the stock within the context of what the market's doing. And that's why Bill was smart enough to put that index line at the top of the charts. And so the fact that the market has been coming straight down and it's been trying to fight it, and it hasn't done it perfectly. But what's nice about it is, let's go to the weekly for a second, because there's so much you can see on that. That it was able to hold up above the low of that long basing structure that it formed. So it didn't quite undercut it, and it got support in there. And we have 2 key weeks of supporting action where, if you look at the closing range for each of those 2 red weeks that we just had, is very, it's in the upper half. So again, that's telling you that there are, signs of, accumulation. People are wanting to support this stock, even though it's kind of at crazy valuations. But if you look at all the fundamentals over there on the left side of the chart, I mean, it's darn near perfect. It's almost like a long-term leader caliber of stock, which is a new feature we have at Investors Business Daily, where it really focuses in on stocks that have very stable long-term earnings. So we've got a 38% growth rate with the earning stability of 11, Violet wants to be part of this broadcast.
I think she likes team too.
Violet, come here. Violet, come here, sweetie. It's okay. It's okay. And so you've got that, all the numbers are just solid from the EPS rating all the way down. There's really no holes in the stock, and even the sales growth is, steady in the 30s and 40%. And that RS line is just absolutely beautiful. What's your take on this one?
No, this is exactly why you want to pay very close attention to the RS line, because that's going to put it in perspective here. What are the stocks that are outperforming? Because the price and volume isn't necessarily going to always stick out. We already know Atlassian's a great company.
And we use it here at the firm.
We use it here at the firm. We use Confluence. We use Jira. All the product team, the developers. This is how we do it. They'd have to deal with me where I say, I give them all the requirements, or Mike's telling me something, and then I give it to the product team, and they put it down into Jira and Confluence, and they document it, and then they try to get into a release down the line. So we know the company's great. They're doing some amazing things. They're riding this huge trend of the cloud and making everyone's lives easier for the developers and the product teams. So the story's there, but that RS line, that's really the big thing, because that's going to show you the stocks that are holding up the best in this brutal bear market. And let me clear out the lines here. But if I go back, here's the S&P 500 chart.
Yeah, it's falling off a
that
cliff,
puts
man.
it in perspective there, right?
Yep.
This goes, it's falling apart, and what, the S&P's off 25% off, maybe more off its high. But meanwhile,
27 as of the close.
Okay, thank you. So 27% off the high. Meanwhile, Atlassian's just going sideways. It's only 10% off the high.
Yeah,
and
which is
right here,
just as
10.9%.
amazing for
It's
a
incredible.
cloud stock, right? Because you would think that with these stocks that are trading at these huge valuations, that those would be the ones that are off 70, 80% off their highs.
Right, exactly.
But that's almost one of the things that you can do right now is just do a percent off high screen for anything with good fundamentals. And those are the ones that the guys and girls that are controlling the billions of dollars are deciding to make their plays and building positions in.
Yeah, and what's also interesting is Atlassian, and remember 2018, the way it ended, that was a very quick 20% correction there in the market. What did Atlassian do? It built a cup with handle, and it was one of the first stocks to take off then. And look at the nice run that it went on. So a lot of these great stocks, they're going to fight the trend. If they're doing amazing things, they have a chance to do it again. It's not guaranteed, but the ones that hold up the best, once that pressure is relieved, and now we're back in an uptrend and the wind is behind these stock sales, the best ones are right into new highs, and everyone's winning at that point. That's why we like to have stocks that are right near new highs, because there's not a lot of disgruntled shareholders who've lost a ton, and now they're just looking to break even. So they're extra and new sellers at that point. When these are new highs, everyone's winning, and we want to be in those type of stocks.
And one final point on this before we go to the next stock is, as you were saying, out of that cup with handle, if you just step back from the chart and only looked at the a break of a 10-week moving average, that would have got a bulk of that move up, and that was your decisive break of your 10-week line. And then it did turn and move higher, but nothing is perfect, and it really is allows you to lock in a lot of the gains just using it, buying it at the breakout, waiting for a decisive break of your 10-week line.
Perfect. Okay, so let's go to the next stock, and ticker symbol is NET. This is a new company named Cloudflare. They just went IPO on September 13th, 2019. And before the whole coronavirus, a lot of these new cloud-related companies, especially ones that were optimizing a lot of the data that's happening on the web. I mean, it's amazing if you look at some of these charts, the amount of data that's being collected by everyone, and that's requiring huge bandwidth too, right? And so any company that's involved in either security or managing this traffic, they're going to have a lot of demand for their services too if they're really good. this one
Yeah.
is hanging up quite well.
Exactly. Anything in the firewall space is always, produces a lot. Of great companies over the years. And so what I like about this one is the fact of last week's action was really telling. But it came out, and I saw it when it broke out, and we've talked about it on IBD Live a few times, but I wasn't that crazy about it. I thought it was a lower quality stock just because the base wasn't that perfect. But last week's action really, told me that there was something special here. But the fact that it was able to have that much buying go in there, have a huge
Right.
spread, closing near the highs, that really opened my eyes up and said, "Wow, there must be something special here." It doesn't have earnings yet. It's one of those stocks that is just trading off of the sales, huge sales growth without earnings, anytime soon. So it would make it from, we've talked in the past about grading stocks. It couldn't be an A stock just because it's not profitable, but it has enough of those other things going for it, really meaning this support in this major correction. Can we look at the daily chart real quick?
Yep.
And again, if this was a normal environment, this would be a horrible chart, wide and loose all over the place. But
Right.
what we mean by wide and loose, if you're new to our style, is just the big spreads, the distance between the high and the low on any given day or over a few weeks. If it's just, has tons of price discovery, it's telling you that people don't know what to pay for it. And that's what's happened here. And even earlier today, it looked really good. It looked like it was going to be breaking out into, and make a run for 24, kind of near the old highs, but it wasn't able to do it because the general market, kind of paused and came down. So I'm keeping a close eye on this one, uh, really because of that action that it had last week.
Yeah, no, and you want to once again keep the ones that are right near new highs. Newer companies are always great. If you want to learn more about the stock, you can always click on the little link right there to go to cloudflare.com, go to the events and presentations part of the website. And a lot of times they'll have these beautiful PowerPoint presentations that they've used to present at analyst conferences and things like that. And you can really learn a lot about the company.
It's funny you mention that because earlier today when I was looking into it, I was on their website, and you want to do that for every stock because you learn so much. And it was really nice how I was looking at their pricing structure from their free stuff to their kind of, small business all the way up to their enterprise. And it really seemed laid out in a very logical fashion. And I was quite impressed. And sometimes you look at a website, the chart looked good, the numbers look okay, and then you go to the website and you go, oh, I'm not really crazy about this
Right.
business. So very, very helpful to do.
Okay, let's go to the third stock, and it's DocuSign, ticker symbol DOCU. And this is one we've spoken about before. A lot of people now, I think, can relate to it, especially if you've bought a house or some kind of real estate or done some kind of contract in the last 5 years. You might have used one of these online electronic contract kind of signing things. It makes life a lot easier. Mike, what do you like about the stock right now?
Yeah, I like similar to the last one. I like the action that it had over the past couple weeks. First, it was really trying to hold up as the market was coming down, and then it finally broke the 50-day and went pretty much straight down to the 200-day, which is that black line. But it was able to get support off of there. So while it is kind of wild and crazy in here, it is only 12% off its highs as of the close. I mean, that's very significant given where the market is right now. So that's telling you that the people are wanting to pay up for this, even though, it is at a kind of a nosebleed valuation for people who, trade from a value standpoint. But let's go to the weekly on here because these numbers are amazing. Um, you know, Look at the sales growth is really really strong, but I'm focusing in on those estimates. Having 2 years of 60% plus estimates, that's a massive increase. Very uncommon to see, and
Yeah,
it's
and
good.
also, Mike, I'm looking at the annual earnings here. It goes from -8 cents to 9 cents to 31 cents to 50 cents to 84 cents when you're throwing in those estimates too. So it's dramatic increase in earnings, and it makes sense, right? This trend is not going to stop. This is the leader in the space. And they're developing a pretty big brand name because everyone's heard of DocuSign now.
Yeah, and it is what everybody uses. And I can tell you, when I was in college, I was a courier, and I would deliver packages from, from a the loan department to the person who was, buying the house, and back to the title and all the different stuff. Now, no one does that. You're just going to do a DocuSign, and where it's just electronic and it's instant. And so understanding how, when there's important documents that need to be done, whether it's legal or even intercompany, like you mentioned, we use this all the time. Things have completely changed even at our company versus, we used to have interoffice mail. Now we do it via DocuSign, and so it's a game changer. And then you put on top of it the coronavirus fears. No one's going to want to touch documents or have to deal with people if they don't have to. So this is something that isn't just for right now. I think it's kind of a game changer going forward.
Yeah, and once again, if you just look at that RS line, it's just screaming to new highs. The stock is only 12.1% off the high, so it is acting very strong and definitely worthy of the watch list. So there are a number of ideas worth considering. Thanks, Mike, for joining us today. And let me blow it up again so everyone can see the wonderful Woodstock crowd.
I'm wishing I was there, man.
Me
Thanks
too.
for having me.
Me
I
too.
appreciate it.
That's it for this week on Investing with IBD, sponsored by MarketSmith. Next week, we will have Scott O'Neill back on the podcast to talk more about uptrends. So that's it. I'm Arush Paris, and thanks for listening.